The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Looking good, Billy Ray. Feeling good, Lewis. This is Larry Pesavento sitting in for John Logan. He's still recovering, so he must be under some pretty strong medication because this guy really loves the markets like I do. Anyway, let's take a look at where we are right now. I posted the first chart today into Tiger TV, which is basically the breadth of the market. And as you can see, since we hit that super full moon back on the 28th, we've been in a straight up one-way Corrigan for this is the 9th day, it'll be the 10th day today where we've made higher highs. The VIX has been down 9 days in a row, and I believe the record is 10, so that's going to probably make a record today. But right now we're relatively quiet. The New York Stock Exchange Index has made a perfect ABCD pattern. I'll post that in just a little bit, but I want to talk a little bit more about the breadth because one of the articles that was very prominent on the internet this week was from our old friend Marty Zweig. Marty was very, very we were the same age. He was very, very successful, and in stocks, he was a regular on the Louis Rukeyser show for many years, and I was fortunate to have met him back in the mid '80s, and really nice fellow. Anyway, he had an indicator that doesn't happen very often. I think it's only happened 12, 13 times in 35 years, but it's a variance indicator where it's called a Zweig oscillator, and that means that when the breadth moves very, very strongly in one direction, it has a tendency to keep that moving for the next 20 to 30 days, and that certainly could be happening in the market to this day. However, the index itself, if you go back and look at it historically, it only has about a 50% accuracy rate. Yeah, but the ones that it hits are just absolutely monsters. And the way this came out of here on the 28th of, September, but the signal didn't kick in until till Thursday. At Thursday on the close. So, you had to be, you had to give up a lot, to get into that. I don't know if it's going to work or not. It's just something that you ought to keep in mind, because the breadth is, relatively strong here, and that's what we, we have to go by, because the breadth is what kept us short all the way down into the 28th area, and that's when we had the big Gartley pattern that we talked about many times. I'm going to post in here this morning the New York Stock Exchange Index, because there's a little tiny bit of divergence here going on in the market. We'll cover gold in just a second. I know everybody's antsy about the gold and the silver, but we'll cover gold in just a second. But the New York Stock Exchange did take out the September 17th highs. It's completing an ABCD pattern. If you believe in the work of H.M. Gartley, Gartley said, you sell the first ABCD correction in a bear market, and this is certainly a ABCD correction. And I don't think there's any question that we're in a bear market, because, we are below the fact is we're lower on the year in the New York Stock Exchange Index. We're right into the gap of August 24th, when we had the day before the big down move. And so this market is still in a downtrend. The question is how much is it going to rally from here? And with the thrust that we're having, with the advanced decline line moving like it is, we could go a lot higher. We're having, the Dow is leading the market. I mean, there's no question about it. The S&P 500, folks, could not even get a higher high than on the 17th. I was totally shocked of that. It's really amazed me because of the fact that we did it so easily in the futures. But the cash S&P was not able to do that, and that's a very unusual situation. So we'll probably do it today, maybe. But the ABCD on this move takes it up another let's see, another 4.5%. So we could get up to 207, which would be around 2070 in the S&P, which is another 60 points from where we are right now. So that's telling us that we could still go a lot higher if in fact we do that. So this will be an interesting day. The cycle that I was looking at from October the 6th was such a big cycle. I was really surprised that we didn't we didn't turn down from that area, but it happened to be the next day was the FOMC meeting, and as you all have realized by now, the risk off is in the game, and so everybody is going in and buying stocks, and it seems to be the right thing to do. The Dow itself, if you'll take a look at that, the Dow has made a 20-man line. It looks like it's going to be a little bit higher today. And it's within, the Dow is within 70 points of the 61% retracement of the whole move. This is, partly, in fact, that we have stocks like McDonald's and Disney, the high price stocks, and the Dow is a weighted index. It's not a cap weighted index. It's a price weighted index. And so that makes the index of high price stocks in the Dow move better than the other stocks. And since there's only 30 of them, it don't take a whole lot of movement to get this thing to go. But that's what it's doing. It's getting very, very close. We have remember we had that super full moon that came in on the 28th, and now we're in the zone now for the new moon, which is started on the 10th. It goes from the 10th through the 14th. The actual date, I believe, is tomorrow, or late tonight or early tomorrow is the new moon, and we'll see if that's going to be a movement. Maybe it went straight up in from the full moon into the new moon. We'll see that. But the only way, I said today or this weekend when I did all the work and finished the letter and everything, I said the only way that you can be bearish this stocks market today or this week is to see it turn down and turn down dramatically, at least 1%. In a day. That's about 100 points or so in the Dow, which is really not very much, but it's been going up so fast that there's just nothing in its way right now. And I'm a technician. I don't know about the fundamentals. That doesn't bother me at all. The fact that I don't understand that, I can understand the technical part, and we can certainly see that the market is very, very strong, and you just can't stand in front of it. My first indication that this market could possibly start to move down is if we get below, 1995 in the December S&P futures. That would be the first thing. Now, we had another relatively minor divergence that happened also on Friday that really surprised me, and that was the fact that the NASDAQ was only able to make a 786 retracement of that move. And if I can just find this NASDAQ chart, which I will be in just a second, I'll be in good shape, but I can't find it now. I can't. Here we go. And we'll put it up here and take a look. You'll see that we have gone up and we made the 786 retracement. Now, we did make a slightly higher high last night by about 1 point. From Friday. We sold off a little bit from that level, but it's, not too far away from it again. But this doesn't mean that it's going to stop. It's just the fact that, if you look at this, the New York Stock Exchange Index has made an ABCD on this pattern that we're looking at right now on the NASDAQ daily. And so if they were going together, the NASDAQ would be trading 200 points higher, up around the 4560 level instead of 4360. So there's a little bit of divergence coming in at that level, but you'll wait and see. When I look at the long-term chart and the one that really tells the tale for me, and that is this long-term yearly well, it's a monthly chart of the New York Stock Exchange, and we talked about this before, but I think since this is happening right now, we probably ought to talk it again. You'll notice that we have these 20-min lines in here, which are the trend lines where they broke down from, and we'll see what's going on. The main thing that you're looking at here is when you're looking at this long-term charts, you're seeing that after the trend line was broken, as you can see by the blue line and the red arrows there, after the trend line was broken, if you'll notice, the market rallied up somewhere between 2 and 3 months and made a 61% retracement and then turned down. And this is what we have going on right now. We've got the ABCD pattern coming in here at the present time. The problem is on the New York Stock Exchange Index, we're only making a 50% retracement at this time with the ABCD pattern. So this is a key week. But like I mentioned, I think it's pretty hard to come in here and pick a top. I think there's a lot of resistance at the old high in the S&P. We took that high out by 2 points. It was at 21.12. We got up to 21.14, and we're not too far away from that right now. So these are things that you've got to pay attention to. The FTSE that we talked about before also went to a 61% retracement, went slightly above it, and the DAX went a little above it also. The DAX has had a really wild day today. It's had 100 points up, 100 points down, which is not unusual for that one, but that's the main thing to look at. Now, if we look at the components outside the Dow, which is the Dow Jones Transportations, you'll see that we still have a potential for much higher prices in the transportation, where we could go at least another 300 points higher and still be very bearish, because this thing topped in October of last year, and it's making its second major ABCD correction. So that's what it looks like. So the key here is to wait and see what's happening, and we'll watch to see what's going on with the markets. We've got gold very, very close to the breakout level, which is the old highs up around 1169. That's looking like it wants to pop through there without too much trouble, but it's very important to watch that level, because there's a potential, because we're coming into this new moon zone that we're in right now, and gold works pretty well with full moons and new moons, as you can see. You'll see what's going on, with that particular thing that's happening. We'll be watching, some of these moves. We're going to see if the silver needs to get up around that 1630 level. Okay, we're going to take a little break here. We'll be right back. This is Larry Pesavento setting in for John Logan.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back, folks, and this is Larry Pesavento setting in for John Logan. I posted the next chart in here on the Russell, the 2000. It's a smaller index, the IWM, which is ETF for that. And you can see that the market has not made a new high above that key level, which was when Mercury went retrograde on September the 17th. Now, we've not taken it out in the S&P cash. We haven't taken out in the Russell, but we've taken it, and we haven't taken it out in the NASDAQ, but we have taken it out in the Dow, and the Dow is, that's been really influenced by McDonald's, which has been stronger than just about anything that we've seen recently. And, Nike's had a good run and stuff like that. So that's not unusual to see the Dow stocks do that. So, folks, this is still a bear market in my opinion, but, this thing could go higher, so you don't want to stand in front of it. There should be some resistance up here between 2014 and 2020, somewhere in that ballpark. But, we could go higher. The Dow Jones, like I mentioned before, is only 80 points away from the 61% retracement of the whole move down. Now, I know this is not the same type of situation, but in 1929, when the market broke, it went down into November of 1929 and then rallied into the first week of April of 1930, and that that rally stopped at 59.7%. I remember that because I was looking for a fib retracement. I wasn't trading at that time, of course, but doing the research on it, I was seeing what would happen and missed it by just a little bit. But those were different times because, you had, totally different things going on. Well, actually, really not, because you had automobiles going crazy. At that time, there were 2,000 auto manufacturers in the United States. Telephones were just coming out. Electricity was just coming out. Just everything was going on, much like it's going on with the internet, right now, and all the stuff that's going on. I happened to be on the plane coming home, and I saw a lady next to me, well, the next row up, so I was sitting on the aisle, I could see what she was doing. She had an Apple phone, she had an Apple notebook, and she had an Apple iPad. Excuse me, and she was working all of them simultaneously. I'd never seen anybody multitask that quickly. But boy, I'll tell you, this stuff is way beyond my pay grade, so we'll see what happens and see what's going on. We'll have to wait and see. Okay, now the next thing we wanted to talk about was two things. One is we showed this before, and this was something that we said could possibly happen, and this was the work from Steve Moore up in Oregon. As you can see, this thing nailed that bottom, right spot on, and it's showing, that we could have another, a whole 20 more days up, and that's what I mentioned before, because if we clear this, there's really nothing to hold this thing back. And believe me, this can just be a short covering rally, but it can go. I don't think we're going to make new highs. Boy, if we make new highs, boy, I have to really look and see what I did wrong, because that's such a major high up there with that 5-wave reverse point wave, and the fact that the number 2137 was an exact 1.618 of expansion, of the whole move from 2000. So that should be it. But the quality of these rallies can really be, really be crazy. Someone's asked me a question by email over the weekend about the influence on the Federal Reserve, and folks, I don't know what's going on with that. I don't believe in quantitative easing, that it's the right thing to do, because I'm from the old school where, you just don't do things like that. But there was an article that someone sent me about a very prominent college professor. I can't remember his name. He was one of the Eastern schools. That it didn't make any difference whether the Federal Reserve had a balance sheet of 4 trillion, 10 trillion, and 100 trillion. It was all, just a game, and the U.S. government is not going to go out of business, and bonds are not going to go out of business. It's just an accounting thing to keep everything running. Boy, that doesn't make any sense to me. But he's a college professor, and I'm just an old cowboy out here, and I'm not even much of a cowboy because I don't even like to ride horses. But I like to bet on them, however. That's a good thing. And pretty lucky at that, too, by the way. Okay, now I want to talk a little bit about one of the charts that I get from my friend John Murphy. John does a lot of work with, how stocks move above and below the moving averages. And I wanted to bring in showing you what he's looking at. So we're going to take a little break here, and we'll be right back after these few words.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this is Larry Pesavento sitting in for John Logan. And the chart that I'm showing now in TFNN's Tiger Den is the chart of the percent of stocks above the 50-day moving average. This is from John Murphy, the master of the technical books and stuff. So I just wanted to show you what he's looking at as far as you can see that these things, once they take off, they move very, very dramatically. This is what we started the show on, showing about this thrust that's happening. Now, sometimes this thrust will, it's just a quick short covering rally, bada bing, bada boom, and it's all over, but you cannot stand in front of it. That's why this next day or two is very, very critical. We've had slight divergences that I've talked about with the NASDAQ, the IWM, and the S&P cash, but the other markets like the Dow and the S&P itself and the New York Stock Exchange Index has made an ABCD. So we've got to watch that very closely today. And the reason why is we're coming into this new moon. That'll be coming in, I think it triggers in sometime tomorrow morning, early in the morning, 1 or 2 o'clock Eastern time, and we'll see what happens. Remember, we had that super full moon down on the bottom, so we're assuming that that's it. And if you don't believe lunar cycles, folks, just, do Jim Twentyman's work and say, defy human nature and do the work yourself. Just go in and post out your charts and mark where the full moons and new moons come in, and you'll see that many times they come very, very close to the actual spot within a day or two where these markets make some terms. That's why one of the reasons why we look at the cycles from some of these planetary things is because they do have some good probabilities, but they're only probabilities. You know, we had such a big thing coming on October the 6th. You know, that was just huge, and yet, you know, it didn't do anything except, you know, go straight up, and that was mainly, I believe, the Federal Reserve coming in. That's when the market really took off. It was still holding below those levels until Thursday at 11 o'clock, and then the market, you know, exploded. And that happens. You know, you certainly you can't stand in front of those darn things because they can be, you know, pretty devastating, and, you know, that's not what you're here for. You're here to keep your losses small and try to get some nice profits. So the next one we're going to look at here is the one using the 200-day moving average. And as you can see here, that one has made a perfect ABCD pattern down on the bottom. You can see the red chart, and the ABCD pattern is also showing that's the first ABCD pattern we've had in this index, you know, since we started down, you know, way back on May 19th, which was the Mercury, you know, retrograde. And remember, Mercury went direct on the 9th, so things should be back to normal as far as communications and things like that. So that's another thing that should make the markets calm down a little bit. However, the volatility, I believe, is certainly here today. Certainly here to stay. Now, if we take a quick look here at the volatility index, the VIX index, and everyone should listen to what Basil Chapman says on his show, because he's so far advanced at understanding this particular index that it's something that is important. Now, it's very unusual for it to be down 10 days in a row. I think that's only happened a couple times in history, and we're down 9 days Friday. So that's something that we have looking on. Oh, we got a caller here from California. Brent, how are you this morning?
Good morning, Larry. How are you today?
I am good, thank you. What can I do for you, my friend? Boy, you're up with the chickens today, aren't you?
I apologize if you already talked about it. I was hoping you could take a look at gold.
Sure. I hadn't talked about it yet, but I was certainly, I'm certainly going to right now. Let me just give it a second here, and we'll pull this up because it's at such a critical level. I mentioned it, but I didn't put the chart in. And why I wanted to show you is the fact that, you know, that old high came in at 1169 and change, and today we came in at 1168.80. So we haven't quite hit that old high yet, and we backed off. You know, $4 or $5, you know, very quickly from that level, but that's still kind of early in the morning. But that's the first indication there might be some resistance up in that area. And then if we look at silver, you know, silver can't even, you know, hardly get above the $16 per ounce level, which is rather surprising because that's been the one that's been the leader, you know, all the way up. So this is just a critical time. And as you know, when that gold was bottoming down there at around 1105, that was a spot to, you know, to take a look at it because, you know, that's when we had the super full moon occurring, and now we've got the new moon, and so you've had a 10-day run in gold and silver, so this would be the time you'd want to be looking to take profits, I believe, and then buy it on a pullback.
That makes sense. Yeah, I have some, you know, calls that I've been holding on to for a while. I took some off. You know, I'm free in a position at this point, so I think I'll go ahead and consider taking off the rest today if we get enough of a move here. It looks like it's already made a nice little move. So,
well, we've broken above the trend line. You know, we did that at that 1148 level, and then we, you know, moved another $20 higher. The thing is that we're having a little bit of resistance at that old high at 1169. As you can see, that old high was 1169.80, and we got to 1168.80 today. And so I would be just really, that's an ABCD, by the way, going back from the low on the 14th of September. And that's another reason where I would really be, you know, lightening up on the gold from here. And I'm bullish gold. You know, I just want to buy it on a pullback. But here I want to be lightening up. And if I have to buy it at a higher price, that's what I'll do. But that's what I'm doing right now. If this was really good, Brent, I think silver would be trading at $16.50 and we'd be off to the races. But that's not happening. And so I think it's best to, you know, see what's going to happen over the next day or two.
yeah, I was talking to Basil about I try to do this trade on because they have the weekly options on the GLD. And there was a perfect little setup on Thursday in the afternoon and towards the close, and I just kind of second guessed myself. I didn't do it. I thought I'd wait till the next day, and of course it made the move overnight. But it's those things happen. It's okay. You know?
This is true. They do happen.
Well, you have yourself a great day. Happy Columbus Day to you too.
Oh, yes, that's one of my favorite times. It's funny that you mentioned that, because when my grandparents came to the off of Ellis Island, they moved to 4th Street, right there next to the San Gennaro Church in Little Italy, and they could see the building of the Empire State Building. They had some pictures and stuff, and I went to see the apartment that they lived in 30 years ago, and I went up there, and there was still an Italian family living there. They'd fixed it up really nice, but it's really something to see your heritage of your ancestors coming into the country and stuff. But that's big time over there. That holiday is really big in Little Italy today. You won't be able to get a seat in any restaurant in that part of town.
That's funny you'd mentioned that. I just went back to Colorado I guess it's been about a month ago to do the same type of thing, to go back and see my dad's sister. And I have a lot of family back in Denver. That's where my parents grew up. But I went back and looked at their houses, and kind of by Washington Park, a real nice part of Denver. And
That's where my daughter lives.
Okay.
Yeah, she lives one block from the lake. Yeah, that's where she lives, yeah.
Okay, yeah, so right in the same neighborhood. But I went back to see their houses, and pretty cool. I should go back and, like they're gonna catch up on just where they grew up, and just the whole area, and visit with family. It was a good trip.
Well, good. Well, it's good talking to you, my friend, and hope to see you again here on the air.
All right, take care, Larry. You have a good day, and I'll talk to you soon.
Okay, thanks a lot, Brad. Okay, folks, we're going to take a quick look here at the silver market. And I was showing you where I thought silver should be trading if it was completing the same ABCD that gold is completing, and it is not. And so that's another reason why I think we're going to get a little bit of a pullback here in both gold and silver. Whether that's going to be the case or not, we'll have to wait and see. And believe me, if gold pops up and, gets above 1175, I'm probably going to go right back in it. But right now, we're just going to wait and see what happens. I have another note that I have to tell you. It's sort of sad and happy at the same time. I talked to Paula Douglas, Mark's wife, just about every day, because we were very close. She married Sarah and I, and Mark and I were very, very close. And she was going through the notes in his papers and stuff, because it was 30 days yesterday that he passed away, and she found something that she had to read to me. And basically what it was is that Mark wrote the book Trading in the Zone here in my office, and here in Tucson. He lived here, and he used to come over, and we traded together every day. And the title of the book, he had notes there written, and the note was, well, today I've decided that the title of my new book is going to be Trading in the Zone, because what happened with Larry today. And then he went on to explain what had happened. And each day when he came in, I would have my trade setups, much like I look at 12 to 15 different things, and I find 3 or 4 things that I really like, and sometimes they hit, sometimes they don't. But I had been on a streak of 19 straight winning days. I had losers across the days, but never a losing day. And I had 5 just absolutely perfect patterns. They were either butterflies or Gartleys, and they were just as perfectly symmetrical as you possibly could be. And I was showing Mark, one after another, and I think there were 5 or 6 of them. And I said, this is going to be the 20th day, Mark. And he put his hand on my shoulder, and he said, it stops here. And I says, bullshit. I said, excuse me. I said, it's not going to stop here. He says, trust me. And I said, how can you say that? I said, that's negative thinking. And he said, no. He said, I'm just telling you by the inflection in your voice that this is the day. And I said, what do you want me to do? Not trade him? He said, no, you have to trade him. I started out, bang, 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 0 for 3. And then I did another one, 0 for 4. Then I did another one, 0 for 5. I didn't do the sixth one. And the sixth one was a loser too. I was 0 for 5 that day, and that was the end of my streak. And it was my longest streak that I had with the number of winning days in a row. But when I saw that paper and Paula read it to me, boy, the memories came back, very, very, very dramatically. Okay. We've covered that. I already showed you what I thought was happening in the silver, and so we're looking at that little bit of divergence. I also wanted to mention to you, but we are going to go, I still think we're going to go a lot higher in the metals, and partly for that reason is if you take a look at the daily chart of platinum, which has been the lagger, you can see it made that butterfly pattern down there at the 883 level. 889 level, and has rallied all the way up to a 61% retracement of the August high. That's another reason why I think the metals are going to have just a slight bit of a pullback here. Remember, we've had a nice run here, 7 or 8 days in a row, and so it's normal that you get a little bit of a pullback in some of these things, and then that's what we're watching. So we'll see what happens. Oh, we have another question about the China market, and China was up 3% overnight. They still have not opened some of the stocks that were closed 6 weeks ago. So that market is pretty much hard to figure out, if nothing else, just because of the fact that, it's had the government come in and shut things down. If we looked at the FXI, which I do not have a chart of that right now, it's made an ABCD rally pattern, just like the New York Stock Exchange Index has done. So all of that is telling us, what we're looking at. We're 9 days up in the market today. That makes it an outlier event, because anything past 8, it could go 9, 10, 12, 15, but usually after 8 days, you have about a 90% chance of a turn down. Well, here we are with that percentage looking at us, and then we're also coming into this new moon that we're looking at, and this will be apogee. Apogee means the Earth will be as far away from the moon as it gets, whereas on the super full moon, it was as close as it could get. So it should be some pretty good, making some pretty good times of what we're watching at this particular time right now. I would recommend you folks listening to Basil Chapman today, because he's probably going to give us a nice report about what the VIX is doing, if he sees anything there, and some of the other things that he's watching that would be interesting to watch. So that's pretty much what we're looking at right here. We have a situation where the Dow Jones has really been the leader here the last 4 days, and that's primarily because of stocks like Disney and McDonald's and Nike, and the high-priced ones, because it's a price-weighted average. It's not a cap-weighted average. The real true average is the New York Stock Exchange. That's the best. It's several thousand shares, the biggest stocks in the world, all cap-weighted, and there's no games played there. In fact, there's no futures market for it, so that's why there's no games played, which is actually a good thing when you look at it from that side of the aisle. Okay. We have a question here about the price of DuPont. All I know is DuPont, it was very, 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 very oversold, as was Caterpillar and a few of the other Dow stocks. And that's one of the reasons why the Dow exploded out of here, is because they were so far, down the road. In the hole. Okay, we're going to take a little break here, and we'll see what's happening.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, folks, we're back, and this is Larry Pesavento setting in for John Logan. I wanted to bring the next chart up, which is the crude oil complex, because, you know, that gets a lot of press, and I think it's important here to look at the divergence that we have here between what's going on between the crude oil futures and the underlying products like the gasoline and heating oil. The blue line is the gasoline, as you can see, is far, far below what's happened. It hasn't even rallied at all. Well, very little, and the same thing is true in heating oil. Now, we heard this over the weekend that the OPEC meetings have ended, and they are very positive that we're going to be looking at $80 a barrel oil next year, and that might be true. All I know is that the rally that we had up around that 151 level on Friday took us to the 50% retracement of the move down from June. And, this market has had a pretty good run, and I would be expecting to see a little bit of a pullback. There should be some pretty strong support at around 46 or 40, around 46, $47 a barrel in crude. That's what it looks like from my perspective. But, we'll wait and see what the trading gods bring us. But there's a big divergence here between the products and the crude oil itself. I noticed that gasoline in some parts of the country is, far below, $2 a gallon. Here in Tucson, we're at $2.15 a gallon. And it was just about a year ago, that we were, up around the $3.20 level. So that's a nice, in way of getting a good, what do we call it, a good price break on the taxes, if you want to look at it that way. So we'll see. Looks like we're going to start a little bit higher here in the NASDAQ this morning and also in the Dow Jones. The S&P is basically unchanged. We've got gold up $10. It's been as high as $12. Silver's up 15 cents. And so we'll see crude oil is down a little bit, not too much. It's only down just a very small amount. The bonds are very interesting here because we've had a situation where they've been under a great deal of pressure, and we should be coming into a time where we should be in some really strong support here in both notes and Treasury bonds. In fact, those were one of the things that I had on my wish list today to see that they would come down and complete the pattern for a good rally. Now, we're rallying pretty strongly right now in the bonds and the notes, but, the basic trend is still down. The question is, we're down 5 days now, since we're more than that. It's 7 days down from the last time the Fed met, so we should get a possibility of a bounce here in bonds, and that might be enough to, put a lid on the stocks for a few days. But like I mentioned, I don't think you can be really bearish stocks here just because of that breadth index. You have to respect that, and the only way that you can be bearish is if we turn down, move down about 1 or maybe even 2%. This week, either maybe today, tomorrow, Wednesday, whatever it is, but you've got to close lower on the week. Then you can start looking at the bearish side of the market because the ABCD would have completed. The market didn't explode anymore to the upside. So that's what I'm looking at here. I think you just have to be patient and see what the trading gods are going to give you, because the breadth that came out of here was very, very dynamic, and it had to be because you had so many stocks that were, look at these stocks. I mean, Wynn, which had given up 80% of its value, rallied 40% in 7 days. Volkswagen, under a great deal of pressure, rallied 33% in 5 days. Deutsche Bank, they're not even sure that bank's going to make it, and it rallied 25%. So you don't want to stand in front of those things, folks. They sting if you're on the wrong side. Okay, live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.